I'm Paul Salazar. I'm an agent at Hilton Hyland Real Estate in Beverly Hills. Today, we're going to talk about the 5 strategies that I use to find off-market properties. Especially right now during COVID-19, we're seeing a huge drop in new listings over all markets, right? I mean, from here to New York, there's about a 60% drop right after the shutdown. That's climbed up a little bit, so it's not as bad. I think it's in between 30 to 50% less new listings that are coming on the market every single day. And as you guys know, even before COVID-19, the amount of inventory on the market was low, right? And which was driving prices up overall, you know, in Los Angeles and United States. So a little bit about myself. I've been in the industry for about 14 years now. I've been at Hilton and Hyland for the last 11 years. I am a SoCal native, so I was born and raised here. And we also have the privilege of having Jack Gladden on. He is a mortgage consultant at Priority Financial. I've been working with him for the last 5 or 6 years. He's helped my clients with either refinancing purchases, restructuring loans. He's a great asset on my team, and he's going to talk today a little bit about what's going on in the mortgage industry. How you doing, Jack?
Good. I'm good. Thanks. I'm glad to be here again. So a lot has changed since the last time we had this conversation. So I'll go over a little bit about what the developments are right now. But let me just tell you a little bit about myself too, to give myself a little credibility. I've been in the real estate business for 10 years. Living in Los Angeles, it's important to understand there's a lot of different income types and a lot of self-employed people. So my specialty is working with people that have very complex tax returns and income. But, of course, I do everything else. It just seems that the really complicated ones seem to find their way to me. And then we do loans anywhere from $100,000 to all the way up to $10 million, and actually higher than that if need be. I've never done one, but I know we can. I'd love to do one.
Soon.
Yeah. So it's California. You have every different kind of borrower in the world here, so you have to be very specialized and know how to work with everything. So sure. That's what we do. And then Paul, I'm excited to kind of hear what your strategies are for how to find off-market properties.
Yes, for sure. So guys, it's not rocket science, but a lot of people just kind of forget about these things, right? They're actually very simple strategies. And there's going to be some buyers that are on this webinar as well as real estate agents. So I'm going to talk about things that we can do on the MLS. So if you're a real estate agent, this is super important. If you're a buyer, don't feel bad. Just hire a real estate agent to help you out because they can do these strategies for you, right? A couple of these strategies, you can do yourself as a buyer, but a lot of these strategies are going to be for real estate agents. All right, so the best strategy is just to go back and look for expired, canceled, and withdrawn listings on the MLS. I'm going to show you live how I do this, right? So this is our MLS here in Beverly Hills. What I do is I just go back on the expired, cancel, and withdrawn. I go back 2 years. That will give me enough data to find a good amount of off-market properties, right? So let's just say I have a buyer looking in the flats of Beverly Hills, okay? This is a super popular area in the flats. And I'll just do a quick little map drawing here in the flats. And guys, you can do this on Zillow. You can do a map drawing on Zillow or on any MLS. So this is available to all of you. So I'm going to go here. He's looking between $5 million and $10 million, right? Just to give you an example of what I would do if I had a client that was looking in this price range. I'm going to go to view listings. And there's about 45 houses that have either canceled, expired, or withdrawn from the MLS in the last 2 years. You'll see a lot of duplicates here. Don't worry about that. There's plenty of off-market properties here for you to find for your client as a buyer, or if you're a buyer and you do have access to the MLS, through a family member, you can do this yourself. So what I do is I go to reports up here on the top right, and I click down to public records. And the reason why I go to public records is because I want to find out if these properties have sold in the last 2 years, because a lot of these properties might have sold, either off market or they came back on the market and sold, right? So I want to find out if they indeed sold in the last 2 years, because if they have, that's not going to be an off-market property. I want to see a property that has sold over 2 years ago. Okay, so we'll go through a few examples, and then I'll show you exactly how I pitch it to the agent or to the seller. So here's a good example: 623 North Rexford Drive. This property here, if I scroll down on this property, it last sold in 2017, and it was on the market in the last 2 years. So it sold 3 years ago. It came on the market in the last 2 years, and it couldn't sell. So this is for sure a good off-market opportunity. I'll scroll down. This is a duplicate, so just scroll right through that. Another duplicate. 504 Foothill Road. This property, let's look down here. So this one doesn't have any market data on the last time it sold. So if that happens, which is, you know, maybe 1 out of 10 of these listings will not have any data on the last time it sold, I'll use another public record site that I have to find out if it's sold, right? So for now, I'm not going to check it. 519 North Bedford. Let's see if this one last sold. Last sold in 1988. So this is another good example. And again, guys, these are homeowners that have shown interest in selling. They put their property on the market and they couldn't sell it for whatever reason, right? It was either priced too high, maybe the agent couldn't sell it, maybe they changed their mind and they're not interested in selling. That's a possibility. Or maybe, you know, something happened in the family, right? And they said, oh, you know what? Maybe we'll sell in 2 years or in a year from now, right? So let me just go through one more example and then I'll show you what else I do. 524 North Arden Drive. Last sold in 2015. So here's another example. So I just went through 6 different properties and I found 3 off-market opportunities for my clients. Okay, I'm going to go to agent detail short, which is going to show me who the agent was that was listing it before. So for 623 North Rexford Street Drive, excuse me, I would either email or call Charles Lee. And I'll say, hey, I have a client looking in the area, in the flats, in between $5 and $10 million. I saw that you had 623 North Rexford on the market at some point. Is your client still interested in selling? That's it. If I don't want to go to the agent and I want to go directly to the homeowner, I can do that too. I can either drive by and door knock, which is fine, or I can give them a call, or I can find them on LinkedIn and shoot them an email or like a LinkedIn message, or Facebook or Instagram, right? All these social sites. Most of these homeowners, guys, they're on social media just like you. So that's my first strategy. Before I turn it over to Jack, another important thing here is to make sure that these properties are not active on the market, right? Because some of these could still be active on the market. So I would definitely cross-reference this list to make sure that they're not active on the market. Jack, tell us a little bit about what's going on in the mortgage industry.
Yeah, sure. And I just want to say that what you're doing there and helping people find off-market properties like that. I mean, like you said, it's not rocket science, but honestly, I feel like most realtors do not go the extra mile and do that. So they'll typically just look for what the active properties are, and they won't do that because it does require a lot of extra work on your part, because a lot of people might just say no, they're not interested, where if you're just looking at active stuff, obviously they're interested.
Yeah, exactly.
So kudos to you for doing that, because that's a real service, and to work with an agent who's willing to put in the time and who knows to put in the time to even do these sorts of things is really important. So moving forward, as far as the mortgage business goes, things are changing every single day in this business. There's a lot more clarity today than there was a few weeks ago when everything was just changing very, very rapidly. So although the changes are happening every day, we kind of have an idea of where things are going, at least for the time being. That said, it's more important than ever to get pre-approved, because all the rules that you might have thought were true about getting pre-approved and what you could qualify for, down payment requirements, all that stuff likely has changed, or there's a good chance that it did. So even if you have a pre-approval from 30 days ago, I would say that it's important to go speak with your lender and make sure that's still accurate. And for a lot of people, it will be, but there are people where it won't be. So the big thing is, like, if you've got great, 700 plus credit, you're employed, nothing's really changing your situation, more than likely your loan's going to be there. It's going to be the same. Everything's good. Where we're starting to see investors start to pull back is if you've had some blemishes in the past, some late payments, especially a late mortgage payment, or if you have credit under 700, or a very low down payment, or sometimes, or if you're even doing cash out, depending on what the loan to value is going to be. We're starting to see some of those programs that were readily available before start to disappear. So if that describes you, then I would highly recommend reaching back out to your lender and talking to them to make sure that you still can get a loan. So that way you're not wasting your time looking for something that
so
you can't.
So there's overall there's less money in the market to lend.
Generally speaking, but as I mentioned before, like if you're a salaried employee or even self-employed, but you have good credit and nothing's really changed in your employment situation, the only area that I could see that would really impact you is maybe the down payment requirement might be a little more, and it very well may not. But if you've got some blemishes on your credit, things may be more difficult for you now.
Yeah, for sure. Okay, so I'm going to talk about my next strategy, guys. Again, this is via the MLS. Again, if you're a buyer on this webinar and you haven't hired an agent yet, even if you're in the beginning stages, guys, it's really important to start doing your homework with somebody else who is experienced as a real estate agent to kind of guide you through the process, right? Even if you're 2 years out, whatever it is, hire an agent as well as get pre-qualified as soon as you can, so that at least you know what the steps are now in order to take when you're ready to actually buy, right? All right, so I'm going to start with lease properties. This is a very similar strategy to the expired, cancel, and withdrawn. So I just go to the MLS and I will look at lease properties. This is a super simple strategy, guys. Again, we're going to look here in the flats of Beverly Hills. This is the same buyer who's looking in between $5 and $10 million. And first, we're going to look at active properties, lease properties that are on the market. I'm going to scroll down here under the options. I'm going to click on contract info, and I'm going to select not for sale, right? Because if it is for sale, it'll be on the market as an active property. So we want to make sure not to call an agent and ask them if it's on the market, if it's already on the market. All right, so it's the same process as the last time. Click view listings and just start calling these agents. You would be surprised how many of these properties are actually available for sale. A great example, I have a client looking in Westwood and Beverly Hills up to $3 million right now. And last week I showed her 3 properties that were not on the market, and I found them through this lease search alone. Not only active leases, but sold and expired, cancel, and withdrawn leases, which I'll show you in a second. So if you don't know how much a lease property compared to the actual value of the house would be, right? So like if I'm looking here at a property in the flats, 616 North Alta Drive in Beverly Hills, I want to make sure that this property is within my client's price range before I send a letter out to the seller or before I contact that agent. So it's really important to understand what the values are, right? And again, this is where the agent comes in. But what you can do is super simple. Just highlight the address, do a quick Google search on the address, go to either Redfin or Zillow, and just look at the estimate. So Redfin is telling me that this is probably worth $11.5 million. My client, his max is $10 million. So at this point, I would have to make a decision on whether or not to show this to him. Depending on the if the homeowner is willing to sell and how motivated they are, this might not be worth sending to my client, right? But these other properties could be, right? So this property here, 615 North Beverly Drive. Let's see how much this one cost, or how much it's worth actually. We'll go to Redfin. So Redfin is saying it's 8.8 million. And guys, these estimates are getting better, every single day with all the analytics that Zillow and Redfin has. I wouldn't say it's the exact value of the house and what your client should buy it for, but it's a ballpark, right? And that's all we're looking for. We want to know if it's in our client's price range before we reach out to the agent and ask them if their client is interested in selling. So that's active properties. I do the exact same thing for leases that I've sold, expired, canceled, and withdrawn. Okay, the same process goes in, right? And I'll just, even if it's leased out, it could have leased out 11 months ago. The lease contract might end next month, and that landlord, the owner of that property, might want to put their house back on the market. So why not find that off-market property before it comes back on the market, right? Why compete with other buyers when you can only just compete by yourself, right? And negotiate with the seller like that. So that's my second strategy. Jack, why don't we talk about loans for W-2 buyers?
Yeah, so it's pretty simple. If you've been through the pre-approval process before, there's not a whole lot that's changed here. So as I said before, if you're salaried and your employment situation hasn't changed, then not much will, with a couple exceptions where we'll need to verify your employment 24 to 48 hours before we fund the loan, which wasn't really a thing before. Just because so many people get furloughed and laid off, we want to just make sure that you actually do have a job and are able to make the payments. So that's the biggest thing for us right now. The other thing that we're going to verify is just make sure that some companies, they're reducing hours or cutting people's pay temporarily. So if that does happen to you, then we will have to use the lower amount until you go back up to your regular amount. So that can cause some problems for some people. So it's just a good thing to know. But a lot of times, unless your debt to income is right up against the the limit to qualify, even if you do have reduced pay, you might still qualify and it might not be an issue. Yeah. So, but if you were laid off, then we can't get you a loan and we can't use any income for you. I mean, if your spouse can carry the loan by themselves, then we could, but we won't be able to use any of your income for qualifying until you actually start. And even if they say, hey, we're starting next week, we'll need a pay stub to show that you actually did start and you're working again. So yeah, that's the main thing with the salaried borrowers. So we'll get into self-employed a little after. Paul, why don't you tell us the other technique you're using?
Yeah, for sure. And just to kind of chime in on that, I just had a quick question. What was the standard in terms of verifying employment before COVID-19? Was it like a week before or a month before?
Yeah, I mean, it was around 10 days before, or I mean, sometimes more than that. Now it's like right up against it. I mean, for a little while there, they were even saying you have to verify the income the day of funding, but then they realized how.
That's what I heard. Yeah.
Well, and then all these loans didn't fund because, like, the HR manager is not working in the office, and then you can't get a hold of them, and then the loan doesn't fund. So I think they eased that a little because it was creating chaos for really no good reason. Like, I mean, 24 hours is pretty.
Yeah, but you know what? You're right. Listen, I mean, we're in times that are just unprecedented. We've never been in these times before. So they are taking measures to protect themselves, right? Because with the whole forbearance thing, they can give somebody a loan, somebody moves in, and they just stop paying for the next 3 months. That that's a possibility. So they want to make sure that they're not doing that.
And that law, as much as useful and helpful it is for a lot of people, that is actually one of the main causes for all the credit tightening, because what the lenders are worried about is you buy a house or refinance, and then you have what's called first payment forbearance, where you don't even make one single payment on your brand new mortgage, right? And then so the lenders who try to sell that to Fannie or Freddie, they have to take a 700 basis points, so that's 7% loss in order to get that off their books. And so they lose, like, I mean, that's an enormous amount of money they're on the hook for to get rid of it. So that's why you've seen a lot of the tightening was a direct response to the fact that the forbearance is a good faith expression when they say, yeah, I need forbearance because COVID-19. You don't have to prove anything with it, and because there's no proof required, anyone can do it if they want to, but it's risky. We'll address the forbearance thing towards the end real quickly.
For sure. Okay, guys. So this is my I believe is my third strategy. I lost count. This is an old school way of doing things, guys, and it actually works. This is just a simple letter, right? You just write a letter to the homeowner and you mail it, or you can drop it off, and it's just as simple as that. So what I do is, if I have a client looking again in the flats is a huge area, so I can't just start, mailing the whole, that whole community, right? I'll be working, 24 hours for like 7 days straight. I wouldn't have a life. So you would have to figure out which blocks are within your client's price range, right? Or figure out which houses are within your client's price range, because at least in the flats, right, you can have a house that's worth $6 million, and then right next door there's a house that's worth $20 million. That's a possibility, and that happens a lot in the flats, right? Because you got new construction and you got teardowns. If you guys would like a template of this letter in a Word document, Maggie, my operations manager, will email it to you. So just drop your email in the chat box, and we will send this over to you. Another thing about this letter is to make sure that you put a photo of yourself. And if you're married, you obviously your wife or your husband, and your kids and a dog, right? So the more emotion you have in that letter, the more response you're gonna get. These homeowners are getting a ton of these letters, right? Because there's no inventory, right? And they're getting letters from agents, from buyers, from investors. So if you differentiate yourself with a photo of yourself and a little bio about yourself and what you're looking for, maybe talking about how you want to raise your family in the area because they want to go to this school district, or you love this park, or because you grew up in this area, right? Make it as emotional as possible, because residential real estate is a very emotional transaction, right? So again, guys, if you guys want a copy of this letter, I'm more than happy to share it. Just drop your email into the chat box, and we'll have Maggie send it to you. Jack, let us know a little bit about what's going on with self-employed borrowers like myself.
Yeah, so the self-employed borrowers, that one's a little more difficult than the salaried, because if you're a self-employed borrower, effectively you might be your own boss. So we can't simply just like call in and go, hey, are you employed right now? And then they would say, yeah, of course I'm employed. And then it doesn't, like, we can't trust that. So as a result of that, we're having to do things that we've never had to do before, where normally we just require, your bank statements, and they can be up to 60 days old to just show that your business is active. Now we need bank statements that are 10 days or less old on the day of funding to show that you actually have business activity going into your business bank account. And that's a huge deal. And it can be an issue for people like a realtor, or people who typically, it's not like a grocery store where you have transactions every single day. So then you have to have a letter of explanation, and then it requires more work. And we can still do it, but there's a lot more scrutiny. And then if you happen to be in an industry that was hit hard, like, so for instance, Los Angeles, they shut down like all the entertainment venues and stuff, the Hollywood Bowl. And if you have a job connected to the Hollywood Bowl, then there's a good chance they're going to look at that and be like, no, we can't do the loan. You're not going to have any business because they can't do any concerts right now. Yeah. So there's things like that happening. But if you are in business, you still have, business flow. And even if you don't have a transaction in the last 10 days, but you can show you have had transactions recently, and you're in a business where they normally are spread out, it's okay. But then it's very, very important to work with a seasoned lender who actually knows how to do this and isn't just a paper shuffler and is going to go, oh yeah, sorry, there's nothing I can do about it. Because structured the correct way, there is a lot you can do about it. But if you're working with someone who doesn't know how to push things through, you're just going to get declined.
Yeah, that's a good point, Jack. And you've actually helped a lot of my clients. Sorry to interrupt you. You've helped a lot of my clients that are business owners where they couldn't get qualified with like a traditional lender, and right. You were able to get them the loan. Because the self-employed borrowers, they're a lot trickier, and you have to show all this kind of paperwork, and it's a lot different. Let me ask you, regarding interest rates, if you got a good self-employed borrower and a good W-2 borrower, who gets the better rate? And How
Same
does that
exact rate.
Okay.
Same rate. Yeah, there's no differentiation. It's just harder to figure out what the income of the self-employed borrower is. But once we come to that number, the numbers are the numbers, and we don't discriminate salaried or self-employed. It's the exact same interest rates, and rates are unbelievably low on purchases. We're doing, rates right now 3% oftentimes. Some borrowers I've had are even in the high 2s, which I never thought was going to be possible. So
wow, that's great.
if you're in a good circumstance, I mean, it's never been a better time to get a mortgage.
Yeah, no, for sure. And I think there's been a spike. Actually, there's been more mortgage applications in the last, I think in the last 3 weeks, it's actually gone up every single week. So we are seeing buyers out there that are actually starting to say, you know what, it's been 2 months since the shutdown. Things are probably not going to change in the next couple months. So they're gonna, this is part of life. Like, let's just start looking at houses again. A lot of the borrowers and sellers are kind of on this pause.
Right, and I can speak to that directly because I mean, there's a huge refinance boom going because almost everyone can save money by refinancing right now. But almost every single deal I had was just a refinance, and I had no purchase pre-approvals or anything for a couple of months there. And now that has completely changed, and there is just a flood of people wanting to get pre-approved and wanting to get moving, and they're shopping again. So I've seen a huge shift in sentiment towards that, just from the pre-approval. Now, whether or not they actually go and buy something, that's a different story. But it's positive from the standpoint that people still are, doing all the things that they need to in order to actually buy. So it's a sign that things are moving in the correct direction. Yeah,
for sure. And that's another reason why we're having this webinar, guys, is to show you how to find those off-market properties that are still for sale. They're just not active on the market because the seller, for some reason or another wants to wait a couple weeks or a month or 2 months until this is all over. But I tell you this, if they will sell in 2 or 3 months, they will sell now. Okay, because I talk to sellers every single day, and if they were on the market and they took it off the market because of COVID, they are still a seller and they still want to sell. They just don't want to have 20 people at their house, right? Spreading germs, and that makes sense, right, especially for those high at risk. So let me talk about my fourth strategy, guys. For sale by owners. There's not a ton of for sale by owners right now because of COVID, but before the shutdown, there was actually a good amount. I'll show you exactly what I do, because even when I have a client looking, I will reach out to a for sale by owner if they're in my client's price range in the area. I'll reach out to them and I'll say, hey, are you willing to look at an offer from my client? So the two main sites I use are Zillow and Redfin. There's a couple other sites as well. So just Google for sale by owner and you will find other sites that will provide other listings for sale by owner. But I think most people that are looking to sell their house on their own, they're listing it on Zillow exclusively. So I will click here. I'll show you exactly what I do. These are all the for sale by owners. Hold on, show you. So you go to for sale here on the Zillow search, and you only check the box for sale by owner. And there's not a ton of for sale by owners. And again, this was actually, there were a lot more red dots on the screen before COVID-19. But these are motivated people, right? They don't want to hire an agent for whatever the reason is. Maybe they want to save commission, right? So reach out to these people. They'll usually have, obviously they'll have their contact information here on Zillow, and you can reach out to them. If you're an agent, reach out to the seller, right? And see if you can get get your side of the commission for the buyer, right? So that's one site we use. Redfin also has that exact same feature. Not as many for sale by owners on Redfin. Not surprising. I think that Zillow is probably more of a popular site, but you can see here there's a few in the Los Angeles County area. So those are the strategies I use when looking for sale by owners. Also, old school way, guys, drive the neighborhood, right? If you're looking in the flats, drive through Rodeo Drive, Beverly, Cannon, Bedford. Drive through those streets and just look and see if there's any for sale by owner signs, because a lot of for sale by owners are old school and they do not post their property online. they will just do an old school for sale by owner sign on their house with the phone number, and whoever drives by it is the lucky person. So you know, there's not a ton of those, but there are some out there. I was just in Venice last weekend, just kind of walking around the Venice canals, and I saw a for sale by owner sign on there, you know, and I looked online. I could not find that property anywhere on Zillow, on Redfin, on any other site. So that's another good strategy. Jack, back to you. Talk about refinancing. I know that you're really busy right now, man. I know that you're working like 12-hour days just on refinancing.
Yeah, I wish I was working 12-hour days. It's more like 18-hour days. Oh, by the way, did you check Craigslist for some of those for sale by owners? I know people use
that's a good point, actually. You know, and I think back in the day, Craigslist was a little bit more popular on for sale by owners. But another good way that I didn't mention is Facebook, right? If you're part of like a Facebook community in a certain area, just put there, hey, anybody looking to sell their property on there, right? Or go old school as well, and just see who are the owners of these properties, and just, you know, just search their name on Google. You'll find their LinkedIn, you'll find them on Instagram or Facebook. I usually find about 90% of people's emails, phone numbers, or social profiles online. So it's super easy, guys. And if you guys want more help on that, feel free to reach out to me, you know, after the webinar or whenever, and I'll show you how I do that.
Yeah, so refinancing, like I said earlier, like there's basically never been a better time in history to refinance. Rates are as low as, you know, sometimes you're seeing them in the high twos. It's pretty unbelievable on a 30-year fix, believe it or not. So basically, I'll just make it short and sweet. If you've got a mortgage 4 months or more ago, you should probably, there's a good chance you should probably refinance, because you're just paying too much money in interest every single month. So yeah, pretty much that's why we're so busy right now, because almost everybody can benefit from doing this. So we're lucky to be in this position, because I know a lot of people aren't so fortunate. So we're very grateful about that.
Yeah, that's good.
And yeah, I mean, it's as simple as that. And then the other thing to just know about refinance is you don't have to come in with money out of pocket too. So a typical refinance, this is an industry-wide statistic, it's about $3,500 to $4,000 to do a refinance, but you don't have to write a check for that. You can have that put in on your, like at the end of your principal balance, so you don't have to come in with any money out of pocket, and then, you know, you'd be saving hundreds and hundreds or sometimes thousands of dollars per month. So typically it's a pretty good deal for people. And then, you know, if you work with someone like me, I can show you what you're paying now, how much you'd be saving, and then what your break-even point is. And for a lot of people right now, the break-even's like 12 months. So it's a no-brainer. And right now the rates are so low, it's kind of you know, you get a mortgage, get a 30-year, and then you get into this ridiculously low rate, and then you just leave it and forget it. You'll never have to refinance again, hopefully. So it's a great time for that kind of thing. So if you need help with that, or if you have a mortgage, you should talk to me or someone who can refinance you.
Yeah, agreed. I'm on you on that. You know, even though it'll cost you, you know, X amount of dollars, you know, a few $1,000 to actually process the actual refinance, like Jack said, after 12 months, you'll have regained that money back, and after that, it's all savings. So, you know, we're looking at 100. You know, if you save $300 a month or $500 a month, I mean, that's huge savings. That's a car payment. That's you know, it's a vacation once a year, right, to Europe. So I think that's smart for any homeowner out there, or anybody who has a mortgage, if it's an investment property or not, you know, just to, you know, to reach out to a lender and just see if there's a better option out there for you, and just, you know, see your options, right? It's always good to see what's out there. Let me talk about my fifth strategy. And guys, I do have a sixth strategy, so there is a bonus. So make sure you stay on to watch that last one. This next one is just a simple email blast to the agent community. This one, it takes me about 5 minutes. I have a list of about 8,000 agents here in Los Angeles. But what I usually like to do is I like to focus on the agents that are selling in that area, right? So if I have a client looking, let's just say in Sherman Oaks, right, and they're looking, you know, in between, you know, $1 million to like $2 million, I will do an MLS search for houses that are active, pending, canceled, withdrawn, sold within that price range over the last 2 years, and I will just copy and paste those emails. I know that's going to be a lot of work, guys, but this is what we have to do nowadays to find off-market properties, right? And just put them into a constant contact, or just put them into Gmail and just ask them, hey, do you have any off-market properties? I'm looking for this. So if you're a buyer out there, you can do this as well, right? You can, as a buyer, you can go on Redfin, on Zillow. You can find out who the agent in that area is selling. Reach out to 20 agents, right? It can take you maybe 2 hours. Go on Zillow, find their name, Google search their name, and you can find every agent has their email and phone number on some website, right? On their personal website, on their Google business page, on their LinkedIn. It's very easy to find an agent's contact information, because we want you guys to contact us. Okay. Again, if you guys want a copy of this template, more than happy to send it to you. Just drop an email into the chat box, and we'll email that to you. Jack, talk about forbearance. There's a lot of misconceptions about forbearance. What's going on with it now?
Yeah, so this is one of these items. It changes every day, so this will probably be outdated information within a couple of weeks. So make sure to check in with your servicer or whoever if you're considering doing it. As I stated before, forbearance should be considered your last option, not for just moral reasons or ethical reasons. That's separate, just to protect your own self-interest. Because although you can do a forbearance, the guidance right now is that it will show up on your credit report as a forbearance, and then a lot of lenders, investors, have different opinions on how they're going to handle that. I mean, the number one is, no matter what, if you're going to refinance or sell the property, that you have to repay all of the money that all the missed payments that you had, that you accumulated over time on a sale or refinance, right? Before, it was a balloon where they said, oh, if you miss 3 payments on your 4th payment, then you have to make all 4 payments all at once. Luckily, they got rid of that, because that would have created a foreclosure crisis. As far as I know, I mean, most of them have, but this is Fannie and Freddie loans. I'm not sure, each individual bank could have a different policy, so you'll want to be very, very careful about it. And then the guidance from a lot of lenders, they're saying that if you have a forbearance on there, they're not going to refinance you, or you won't be able to purchase a home for 12 to 24 months, depending on the one. So again, just to protect yourself, unless you literally just can't make the payment, you actually did lose your job, then you should do it, right? But if you didn't lose your job and you can make the payment, you're probably doing yourself a disservice by skipping them. And I think that they're doing that intentionally, because they don't want just every single person to do a forbearance. So they want there to be a little bit of a disincentive for the people who don't actually need to do it,
Yeah,
so
yeah, that makes
sense.
sense.
Going on, be careful. Look at every day it's changing. So again, if you watch this webinar in 3 weeks from now, this might not be accurate.
It's outdated. And just to reiterate what Jack said earlier, is that it will put a stain on your credit most likely. So make sure that you understand what the risks are and the ramifications are, right? If you guys are looking to sell your house and buy something, or buy an investment property, or buy a second home, or whatever it is, buy a car, whatever it is that has to do with credit, it's going to be on your credit. Actually, I did this mistake as well in 2012. I did a loan modification on one of my investment properties, and when I tried to buy a property a couple years ago, an investment property, I ended up having to pay an extra percent more on my mortgage. My interest rate was 1% higher than if I didn't have that loan modification on my credit. So it's really important, guys, to really understand what the risks are involved with the forbearance. So let me talk about my bonus strategy, my 6th strategy. This is involves technology, right? So there's a company called Remine, and what they do is they use an algorithm that combines a lot of different things, right? It'll probably combine the age of the person. It'll combine if that person You know, if their spouse, you know, possibly passed away, it'll probably look into how long they've been living at the house, how much equity they have in the house, all that stuff, right? So they have all these kind of data points, and they will tell you if a homeowner is a medium or high probability seller. And it's actually pretty good. I actually like using this to find off-market properties for my clients. And this can actually work when you send out that snail mail, I have a buyer letter. You can, if you don't want to send out, you know, 10,000 mailers to the area that you're looking to buy in, you can just look in Remine and just send a letter to the medium or high score homeowners, right? So this is Remine right here. This is free with MLS, with our MLS, and I think it's free with a lot of the MLSs in LA County. I go to sales score. I just click medium or high. I do a search of the area. Again, this is the flats of Beverly Hills. I actually drew this map out before the webinar, so it'll be a little bit quicker. And it tells you here we have a huge list of people. There's 220 results of medium to high probability sellers. Okay, so go through this list and just reach out to the homeowner. Door knock, old school. Go and door knock. Phone call, email, social media, send a mailer, ask your agent to do all that work for you. And that's my last strategy, guys. Jack, is there anything else that you want to talk about regarding the mortgage industry or about real estate in general?
Yeah, just generally speaking, I mean, as I said before, there's credit still available. If you're salaried, even if you're self-employed, if your income situation hasn't changed that much, then you know, credit's still flowing in that way. So don't be discouraged and think that there's no loans out there. There's a lot of misinformation. So it's just important, form a relationship with the lender and then call them and check in. And I'll warn you though, if you're just talking to like a big retail bank branch like Chase or Bank of America, just because they have a certain policy about what the down payment requirements are does not mean that that's industry-wide. Those are specific to those retail branches. But if you're working with a mortgage broker or a mortgage banker, not a retail bank, it's confusing, but they'll have access to lots of different investors, and so they'll be able to find you, you know, what the best option is for your particular circumstance. So yeah. It's just important to know what the facts are. So other than that, you know, hopefully we just open up soon and get everything going, but time will tell.
Yeah, for sure. And you know, regarding real estate, guys, you know, the market, you know, took a huge hit, and it's going to take a hit. You know, it'll be a while for things to get back to normal. We don't know how long that's going to be, right? A lot of economists are saying it's going to be a V-shaped. A lot of economists are saying it's going to be a W shape. A lot of them are saying it's going to be like a check mark shape. So, you know, we don't know what the future holds. Huh?
The Nike swoosh, right?
Oh yeah, swoosh, exactly. Yeah.
Talking about that.
So yeah, I mean, we don't know what's going to happen, right? So, you know, as of right now, rates are low, which is good, right? So even if property prices drop 5%, but the interest rate goes up 1%, that could be a wash, you know. So why not, you know, talk to your lender, talk to your real estate agent, and ask them questions, right? You know, is it a good time to buy now? Have them, you know, look at stats, right? Have them look and see what is the average medium price in the area, and then let's say that drops by 5%, and then okay, hey, you know, you can buy this house maybe in like 6 months for 5% less. All right, how will that change my payments if the interest rate goes up 0.5 point or, you know, 1 full interest point, right? So that's when you talk to a lender and have the agent and the lender communicate together. That's super important, guys, because it's a team, right? You have your lender, your real estate agent, and yourself as the buyer, and we're all working for you, the buyer, to help you find properties that are off market, on market, to help you negotiate, to help you find the best interest rate. Jack, thanks for being on this webinar. I really appreciate it. You know, taking your time. I know you're working a lot. I love that you're still, you know, that you're still killing it there. That's awesome. Say hi to Alini for me. Have a good weekend, guys. If you have any questions, you have our contact information here. Feel free to reach out to us. We're here to help you. Even if you're not in our area, we're still here to help you. We'll help you find somebody in your area. I know that that Jack has done loans for my clients in Arizona and Florida and other states as well. So
Right.
he not only works here in Los Angeles, but works throughout the United States.
Right. Yeah. Thank you, Paul. Looking forward to the next one.